Let's quickly begin with a mood check on what has happened in the international markets over the night. Amit Ranjan also joining us here in the studio. Amit, US inflation has come in hotter than expected in the month of January at 3.1%, raising possibilities that higher for longer narrative will continue.
You use the right word, sell-off. It is red everywhere. The Dow Jones closed in the negative at 1.35%. S&P 500 closed in the negative at 1.37%. Nasdaq closed in the negative at 1.8%. Stocks 600, even the European markets were in the negative at 0.95%. Hang Seng, however, even though they are going, they just through their lunar Chinese New Year, they were in the positive at 0.15%.
Right.
Nifty again is in the negative.
All right, a massive sell-off, Suyash, and also obviously expected because the month of January was supposed to be a cooler month. We were expecting a soft landing. That is not happening.
I mean, we were seeing inflation ease off so nicely in the US, right? And, you know, if the US Fed in its last policy meeting had not thrown cold water on the possibility of a potential, rate cut in the March, I think the inflation data certainly has. And that's a big negative for the markets. And, it's one of the reasons why we are seeing a correction in the global markets as well, because the markets were rallying on the back of course, a tech-driven rally, but also the expectations that inflation, rate cuts in the US will come sooner by at least March or June of this year. But I think the inflation data, which is slightly hotter than what the the estimates were, has thrown water on an potential rate cut. And we are seeing a spike in the dollar index as well as your 10-year bond yields. The 10-year treasury yields in the US, they have risen to about a 2.5-month high. The dollar index is at a 3-month high, and strength in dollar is bad for emerging markets and for India. And it's sort of a double whammy for us if you look at it, because the Q3 earnings have been nothing to write home about, and we have seen a sharp cut in a lot of stock prices because of the disappointing earnings, and now global markets are also adding to that concerns. But Shweta, apart from that sentimental sort of pullback, we may not see any long-lasting impact from this inflation data, because inflation in India is easing. It's at a 3-month low. So RBI will perhaps look at cues as to our
domestic
local
cues
data, right? And food inflation, which Governor Shaktikanta Das has also pointed out, remains a problem for our markets. That is also easing, well. It came off by about 1% or so on a month-on-month basis. So I think the focus, once this sentimental sort of pullback is done with, the focus will once again shift to our own local markets and the cues coming from the domestic markets.
In fact, on that question, obviously there are two thoughts out there on the street. One is, of course, there may be rate cuts. US Feds may just cut rates towards the end of the year. So it may have prolonged the higher for longer narrative, but the rate cuts will eventually happen. A lot of people are still very optimistic about it. But back home in India, we're not really mirroring the inflation that US is witnessing at this point. Inflation is cooling off in India. It's quite in line with the expectation, not just for the quarter, but also for the entire financial year. So, RBI may not just mirror its US counterpart, and we could see some rate cuts happening in India before it actually happens in the US.
I mean, it's rare for our central bank to diverge from the policy of global central banks, especially from the US. But I mean, if someone is to do it, I think it's Governor Shaktikanta Das and his team, because they have taken decisions in the past which have shown divergence in ideologies from the US Federal Reserve. So if inflation continues to cool off, nicely in India, I think they could go for a rate cut.
Absolutely. And the massive sell-off that we've witnessed in the US markets is also now being reflected by Asian markets. I'm seeing Nifty is down 0.6% this morning.
Yes, Shweta, and we have broken, below the crucial support of about 21,600, and it's a multi-session low for us. But we are seeing a good bit of a recovery from there on. But if I think I'll be more concerned about the broader markets. Remember, yesterday we were talking about how global markets pretty much on every month there would be one day where they'd see a 3 to 4% shakeout, but then the recovery would be equally swift. This is not happening this time around.
We're not seeing that sort of recovery
Yeah,
this
but
time.
you know, both indices are making lower lows for the past 4-5 sessions, which is a bearish signal, and the valuation concern is obviously there. You know, the valuations are looking stretched. They are at a decadal high compared to your large caps. So that is a concern for our markets, but I'm also looking at the sectors, and it's a sea of red out there. The worst hit, of course, is the IT pack. Nifty IT is down over 1%, 1.8%, and it's falling continuously, as you can see. As of 10 a.m. it was down about 1.9%, and that is of course because of the fact that a lot of these IT stocks were rallying on the back of you know, because the Fed policy did essentially put cold water to expect of a rate cut in March, but they did you know, did not talk about any additional rate hikes from here on. So that's why IT stocks were doing fairly well, because you know, of course, we have a significant exposure to US markets, and a monetary easing, or at least a higher for longer narrative, bodes well for the IT budgets of these clients. So perhaps their discretionary spending will pick up, and since we are significantly exposed to you know, the US companies and the European companies, IT stocks were rallying because discretionary spending would of course mean you know, a bump up in earnings and revenue for them.
But does the January inflation data from the US would likely pour cold waters on those expectations?
I mean, again, it's all sentimental, because we were not really seeing any you know, order flows getting picked up.
But was this expected?
Yeah, the rate cuts were expected, you know, by...
Was the inflation at 3.1% expected?
No, it's hotter than expected.
Absolutely.
I think the expectation was to, you know, for inflation to come in the month of January somewhere around the 2.9% mark. I think what's more concerning is the fact that core inflation is also ahead of what the street was expecting, and that is also seeing a month-on-month rise. So we'll obviously closely track that, and you know, another segment of the market that's showing significant weakness is of course the banking pack. And you know, we are below the crucial supports of about 45,000 on the index, and yesterday the banking index was the one that provided strength to the markets, and it was the one that took the markets higher above 700 levels, but we have pretty much wiped off all that we clawed back yesterday. And the banking pack and IT, remember, they have a 50% weightage on Nifty. So weakness in IT and bank means weakness for headliners altogether.
Absolutely, and IT and banking pack taking a beating this morning. IT pack down by almost 1.9%. We are of course going to bring in all those details towards the end of the day also. But a big story that we will be tracking and could be moving markets is how Auto Pack is reacting. Auto Pack, I think one of the only perhaps outliers there. Auto and Media up in the green, Auto at 0.19%. But back home again in Mahindra and Mahindra is expected to see it's a jump perhaps in its net profit, a 45% jump in its net profit. Let me quickly get in Amit Ranjan back into this conversation. Amit, what are the expectations from Q3 results of M&M?
M&M has seen robust growth in the auto sector, and therefore the expectation is almost as much as 44.7% increase in net profit, 17% increase in revenues. EBITDA is likely to go up 14%, slight drop in EBITDA margins, almost 40 basis points. It'll be down at 12.6% from 13% the same quarter last year. But basically, robust growth in the auto sector has what is reflected in what is expected from Mahindra and Mahindra Q3 results.
All right, that is of course as far as Mahindra and Mahindra Q3 results is concerned. Quite a lovely, wonderful perhaps quarter expected from Mahindra and Mahindra. Profits up about 45%, and that could move the markets.
Definitely, Shweta, but I think as far as Mahindra and Mahindra goes, I will personally keep a track on how the tractor sales are panning out, because that has been a segment
that has...
A very high
frequency indicator, of course, of the economy as well.
Of course, and we have spoken about it multiple times on the show, how rural demand, that has been a major laggard. Urban demand is being, urban demand has picked up on a month-on-month basis, and we are seeing that reflect in the numbers of passenger vehicle sales, but tractor demand has been a problem. That has been a problem for the FMCG pack and the auto pack as well. And since Mahindra and Mahindra has a significant exposure, or a bulk of their revenues come from that segment of the market, we'll keep a close eye on that. But talking about the stock of Mahindra and Mahindra this morning, it's trading marginally higher. Nifty Auto is down about 0.5% or so. Mahindra and Mahindra is up about 0.5%. But it has been a relative laggard compared to your other passenger vehicle stocks, because when I'm looking comparing it versus Maruti Suzuki and Tata Motors has given, of course, phenomenal returns on a 1-year basis. It has turned a multi-bagger, and on a 6-month basis it's up about 50%. Suzuki has done fairly well as well, 20% or so returns in the past 1 year, 14-15% in the past 6 months. Mahindra is seeing some bit of a weakness in the last 6 months, and that is, of course, after their Q2 earnings disappointed the street. And again, the tractor sales were the big disappointment for the markets, and from there on we have seen some bit of a pressure on Mahindra and Mahindra stock. It's up about 6% on a 6-month basis, largely outperforming Nifty and Nifty Auto, which have given returns of about 12-15%, and in the past 1 month also, Shweta, it's up about 0.7% or so.
All right, so returns quite in line with Nifty, but giving up some of those gains as of today. But coming back to what could be perhaps the sectors that markets will be vying on or banking on in order to perhaps come off from its lows as of this morning. What are the domestic cues, Suyash, that we will be tracking?
I mean, of course, the focus is on the earnings season. We are drawing curtains on it. A bunch of companies from the mid-cap and the small-cap segment are going to come out with their Q3 earnings, and along with Mahindra and Mahindra. And, I think the focus, pretty much earnings, at least if you look at the print that comes out, the numbers that come out, they are a non-event for the market, because the market is forward-looking.
Absolutely.
They are banking on what the analysts, what the commentary coming in from the management is, right? But this time, a big disappointment in some of your momentum-driven sectors like your railways and PSUs are disappointed in their earnings. That has really weighed on the markets, and as we know, stock market returns are a function of your earnings growth as well as the potential of your earnings growth. And the market has been given too much weightage to how much potential they have rather than how much their earnings are.
Absolutely. And PSU story, I mean, that's been quite a surprise for a lot of people out there, and taking a massive dent on retail investors in the past 1 month. What is the expectation? You speak to a lot of analysts every day. What is the expectation as far as PSUs is concerned? Are we looking at a rebound anytime soon, or are the valuations not quite in line or favorable to what the current numbers are?
See, certainly the valuations are not quite in line with what the fundamentals reflect. But, talking to a lot of these analysts, they are of the opinion, I mean, after you see a 40 to 400% sort of a run-up in stock price in a matter of a year, a 5 to 10 or 15% correction is nothing but a blip, right?
It's a blip, absolutely.
But I mean, and what it does is it shakes off the weak hands, the retail investors who got in at the top. So the smart money stays on, the valuations are, getting rather cheaper, and it allows entry points for certain investors who missed out on that initial rally to get back and make positions in those stocks. But with that said, they are, trading slightly higher than their, not slightly higher, in fact, substantially higher from their historical averages. Valuation concern is there, and if there is going to be weakness in the markets, it will be the stocks which have seen, momentum-driven rally in them. Those could be the sectors and the themes that could, see first leg of profit booking take place.
All right, but as far as the PSU is concerned, government alone has lost about 3.8 lakh crore rupees in the past 3 days. So a massive dent for retail investors as well as government on PSU stocks. We will, of course, keep a close eye on all of these developments.